Alright, hello guys, glad to have you on board again today. As there weren't that many users live the last time and it felt pretty much like a waste of my time, we're gonna try something a little bit different today. Instead of spending 1 hour long live session, I'm going to record these few exercise stuff that I'm going to run right in front of you. So kind of making exactly what you guys are supposed to do on your own. So showing you the example, do this thing on your own a lot. It's really analyze, put the stamps, share, repeat, analyze, put the stamps on the chart, share the chart in the Discord to get the correction from more experienced traders, and repeat, okay? Do it a lot so that you get to build your own market experience scrolling through charts. This is what you guys want to do when you have an hour of free time available for trading. Stop listening to the bullshit in Twitter, stop listening to YouTubers, stop bullshitting your heads. Information will never be profitable in a range. Let the dumbs talk about it. You need to trade. At least you need to build yourself some confidence in the market. So look for ranges and do it the way I do. You randomly put 2 letters as an input on your computer. Take the first thing. Don't overthink things. Not enough history. Next. Not enough history. Next. No, we've already done this one. Okay, let's go for this. Great. Okay, let's see. Anytime we've got a trend, are you able to figure out what the third range boundary is? Moving average going up, third range boundary is there. Okay, no worries. There should be any doubts. We rapidly check if there is no early pattern of delayed third range boundaries. There's not. Okay, put the stamp. Boom. Third range boundary. It's a classical one. Put it red. Done. Okay. Remember, the exercise is pretty damn simple, okay? Red means you've got a bearish third range boundary. Blue, you've got a bullish. We don't nearly give a fuck if it is a trending third range boundary or neutral, okay? Just put it red when it's one to the downside, blue when it's one to the upside. I don't matter if you differentiate bullish or bearish and neutral range boundaries. Okay, the black one is when we squeeze the third range boundary. So when you know that the reverse context has been plotted, but the market fucked it all up and made new highs afterwards. In that perspective, you put the black stamp. Okay, and then you've got the final one to put the quarter into, put it, I don't know, green, whatever color you want. These are for delayed third range boundary, when you see the pattern completing itself with a delayed pattern. All right. As for example, in here we've got one, okay? Oh, there's not enough for a trend. I mean, yeah, definitely not enough for a trend. Okay, and no other trends. So this is basically like yet another range adding boundaries, okay? 1, 2, 3, 4, 5, 6. So if you ever try to put any rational mindset to this, it's pointless. You're wasting your time. The only thing I need you to build on this chart is this. Okay, as these are the latest 2 valid third range boundaries, you put your third range boundary as a mark because this is definitely to be done. And in that perspective, you've got a converging trend line, weird downside wedge, whatever that is 5th range boundary confirmed, the 6th one still building itself. Okay, so this one normally high low point, mature range, underlying structure should be favorable to the upside. So if it is, we should be breaking this, break this range boundary that has absolutely no interest for us, and over the midterm reach out for the third range boundary area, period. That's all we need to know about this range. All right, let's do another exercise. All right, we're gonna get something trending in here. That's great. All right, lots of trends. That is one of the assets. Oh boy, yes, that's what I want you guys to study. Big, nice, long-term trends. Boy, gorgeous asset for you to study. Okay, this is what you need to do. Okay, take on this one. Okay, we don't give a fuck about the range. We're going to start with this trend. So first of all, when you do the exercises for the first time, do it with these, okay? With the replay without the replay function. And do it first with the context. Try to figure out where the context have been reversed and where the pattern did complete itself. Nope. Oh boy, it's got excessive. Here's the third range boundary. Should be no doubt about this one. Boom. This is a classical one. Put it red and terminate. That's all I would like you guys to know. Afterwards, 4th, 5th, 7th, 6th, 7th, 8th, 9th, 10th. 11th, 12th, 12 range boundaries. But this is still the same old fucking range. It's just that it's a long motherfucker. Okay, but still that's the same old range. Okay, then in here you can see that the range somehow plots what looks like a trend. So it is trending. Bearish tops and bearish resistances, bearish tops and bearish bottoms, lower low points, lower high points. Okay, go for it. The moving average is lifting away from the context. So third range boundary is in here as well. Where is it? Okay, in here, that's a delayed third range boundary. In here, pure and simple. That's all I ask you guys to be able to do. Anytime you see a trend, plot the third range boundary, move to the next one. Don't overthink things, okay? Trend equals third range boundary. Just place it correctly. Next one, okay, context to context, rebounds and break. All right, delayed third range boundary as well. In here, okay. Next, we trend up again. Context is reversed. Bam, third range boundary in here. Classic one. Okay, sorry about this. I think my computer has a bit of a problem. Okay, here we go. Third range boundary on the context. Same thing in here. Delayed. Okay, this is what you guys need to do. Okay, the delayed pattern is simple. Remember the set of rules, okay? You break a trend line, a visible trend line. You return back to the support channel without reversing it. You rebounds without making new lows. And then you break both the context and the previous low points. And in that perspective, you know that the third range boundary already occurred. All right. Next, bam, bam, bam. Nice, well played third range boundary area. All right, if you can do this, that's perfect. Okay, and then big fat fucking range, staying inside the area, failing to break. And as you can see, range can last freaking long. Okay, then we've got another trend, and now there is not any third range boundary left. That is what you need to do on the first set of analysis, okay? You need to be able to do these things without overthinking things, just applying the goddamn rules and moving to the next area where you can see a trend. That's the first level of difficulty for the for the exercises. Then comes a second layer of difficulty. After you made your first pass, you're going to do it over again on each and every time you've seen a trend, and you're going to do it with, okay, the trend channel this time, okay? So in order to help your eyes, I suggest you turn them to more visible colors, like that, and you try to focus your eyes on the trend channels this time, okay? So bullish moving averages, okay. Here there is a reverse with the where is the third range boundary level? That would be there. Okay, breaking the trend line, context to context, rebounds, and then breaking the previous low point. So that would be there as a delayed third range boundary. Okay, on this tiny little weak shadow in here. Anyway, next, new high point, which means another third range boundary is down the road. Where is it? Bang, in here. Okay, nice and easy. Okay, this one is a classic one, 61% retracement and touching the context. All right, no new high points, so nothing else to do here. Okay, reversed context, pullback, classic. All right, next up in line. Okay, going up, reversed. Oh boy, where's the third range boundary in here? Whoa, whoa, that's going to be a squeezed one in here. There should have been one, but we totally fuck it up. All right, so this is the black one. We don't know where to put it, so normally we're supposed to put it 50% of this and this. Okay, so we take the lowest price, the highest price, and when we don't know where to put it, you put it 50% of the area. Okay, and we buy it as a pullback to try and follow, but that's for further purposes usage. Context reversed. Where the hell is the third range boundary? We're gonna have to zoom in. Okay, well, I don't know, so I'm gonna put it in here. Oh, in here, it's gone too fast, but there's anyway one of these two market tops. This is the same anyway. So here's where it is. Okay, then we'll reverse the context and terminate. Okay, real easy. That's how you guys need to do the job. Okay, then you go bearish. Okay, trend again. Look for the trend channel. Where are the third range boundaries? Okay, let's assume that we started in here. Okay, bang, context to context. That's a squeezed one. Okay, we put it at 50%. And we're done. Next, in line. There's none, because in here there could have been one if we pulled back, but then we reverse the context, so it is context time frame. Remember, you don't trade the trend channels ones when the context is reversed. All right, bullish trend again. Let's go back, baby. All right, then, bang. Third range boundary, easy to figure out. Classic one. Next, we'll reverse the context. Okay. Then this is nothing. New market top, bang bang rebounds, and then new low, delayed. Okay, as you can see, it's easy. And the delayed third range boundaries are always third range boundary on the lower time frame. So now you don't know where to find them, but I'll teach you later. Right now, what matters to me is that you'll be able to figure out that the third range boundary already occurred, even if you missed it, so that you don't trade the fifth one. Okay, reversed, pull back, bang, nice. Third range boundary, classic one. All right, as you can see, this is not a complicated exercise. And as you get familiar with it, it'll become handy and handy. All right, nothing in here. Yes, there is. Okay, in here, the context is still rising, and we pull back to the trend channel. So in here is a specific case in which we get both of them real quickly, one after another on the same level. All right, nothing in here. Yeah, there is one, and as you can see, this one allows you to figure out the delayed one that will come right after. Okay, remember that the delayed one can be confirmed only when you break the previous low point. Okay, so in terms of market replay perspective, if you play this one real time, okay, you would see this. Okay, you reverse the trend channel, so you know that any pullback on the trend channel, there, just like there is now, is a third range boundary. And this third range boundary, as it gone from context to context, if it breaks this point, you know that this third range boundary will actually turn out to be a delayed on the high time frame. Okay, these are things you get familiar with as you practice and as you make yourself your own experience with the markets. Okay, actually we should have kept this one going. Let's do it. Okay, because that's going to be the third step. Okay, when you're going to be able to do this 2 time frames at one, okay, with the historical data, then final stage of the exercise series is that you do it with a replay function. Okay, so you go with this. All right, we're still in the same range. We need to break out of it. Okay, break out of it. New all-time highs, rising, trend channel is reversed. There is a third range boundary. Bam, in here, easy. Okay. Okay, next. Okay, break up. Up. I've seen the reverse third range boundary, so there is another one. Okay, where is it? I would say somewhere near this area. Okay. Well, yet another. As you can see, not that complicated. Context is going to reverse, so the next one is going to be on the context. Okay, the trend channel doesn't matter anymore. We always trade the bigger time frame range. We reverse the higher time frame context, so the third range boundary is going to come on the high time frame. Therefore, you are patient enough. All right, context touch, third range boundary, easy. Okay, it isn't that complicated. This is how you do things. You're inside the freaking big range, so you wait for prices to get out. It can take a shitty amounts of times and range boundaries. Sometimes most of the range exit their structure after 4 range boundary and plus. But some ranges can extend to something like that shitty, I don't know how many range boundary we've built. 3, 4, 5, 6, 7, 8, 9, 10, 11th, 12th, 13th. I mean, anyone trading that range is going to be crazy now. Oh, and by the way, this one doesn't exist. This one is on the higher time frame. As you can see, the higher time frames context has been reversed. So in here, we have reversed the higher time frame context, though the third range boundary is actually a weekly one. But it's on the same area anyway. Okay, so it is there as well. Okay, but this one is on the higher time frame. Remember that anytime you trade a range, you want to make sure you do not trade inside the higher time frame range. Okay, so in here I'm actually doing the exercise with 3 time frames. Okay, I've been able to figure out the third range boundary plottings on their respecting time frames, but this one is happening on the high time frame. The higher time frames context has been reversed. If you want to know how to do this, you double click on the indicator, you go to the inputs page, and you show the extreme channel. Okay, and that will show you this line, which is no more than the high time frames context. Okay, so that's pretty much it. Let's get out of this range. Still not. Still an additional range boundary, and another one, and another one. Oh boy. Okay, down we go. We wait for a trend. Okay. We still have nothing. We wait. Okay, here the market's breaking. Moving average is rising, and the context will likely follow as well, so we can start doing our job. Okay, trend channels reversed. Third range boundary. Alright, classic one, double top. Okay, keep going, and we're real time. Isn't that really simple? So of course it sounds simple when you have a lot of experience with the pattern. So build your own experience with the pattern by doing exactly what I just did. 3-step exercise. First one, just highlight the third range boundary, take a screenshot and share it into Discord so that people will eventually see if there are some misunderstandings and mistakes that can be corrected. If everything's fine, go to the next stage, which is doing the same thing with 2 different size of dots on the trend channel and the context, but do it with the historical data visible on the charts, okay? When you master the second stage level, go for the third stage doing the same thing with the real-time data, okay? Oh, real-time, no real-time, but with the replay data, and try to squeeze in the third time frame, okay, which is basically just looking at the high time frames context. When it's reversed, you know the third range boundary is going to occur on the high time frame, not the context one, okay? If you master this, do it over and over again, 100 times. I don't care how many times you do it, but do it until it feels natural for you to plot this third range boundary without putting a single effort. When it's that way, that means you have enough, okay, contextualization for the pattern. Means you have the green light to start real-time trading the ones you've seen, okay? It's really not that complicated. When you terminated these exercises, you can start learning the trending context. But you need to practice. Remember that when you've learned the context, the third range boundary and their multi-time frame application, when you master this, you need to practice with real money so that the psychology will start rising. Okay, you will start progressing on the psychological side to manage fear of uncertainty and impatience biases. In the same time, you can start learning. Okay, remember the video is that you have 2 things. Okay, first you learn a context technicals, then you stagnate. Okay, then you start to learn the next context, okay, and you stagnate, and in between those stagnation phase, what you do is that you need to progress with the psychology. When you learn, you don't trade, okay? When you have learned, you start trading, okay, so that the psychology meets. When the psychology feels good enough, meaning that you've traded a few times without making mistakes, go ahead and learn the higher time frame context. In the same time, you keep trading what you see, but you certainly do not trade the trend channel, the trends context now. You learn them first, and then when you're confident enough with the patterns, you validated exercises like that, you start practicing trends, that follows the knowledge. So here you fight fear of uncertainty and impatience biases. Here you fight against the trend biases, which podcast will be recorded within the next few days or weeks. Okay, guys, That's all for today. 20-minute long video, and this is the exercise you need to be doing a lot. Repeat, 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 repeat. Okay? Analyze. Don't fear for making mistakes. Take a screenshot. Send it into Discord. People will tell you if you've made some mistakes or misunderstood anything. Repeat, 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 repeat. Grow yourself following the steps I told you in terms of level of difficulty. And when you master the damn pattern, go ahead trading it and move on to learning trending context. That's all for today. Bye, guys.